right, good morning everybody and welcome to another Facebook live stream. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Before we get started, if you can hear me, if everything's coming through clear on your end, just let me know in the comments. That way we have confirmation of that. Want to make sure everybody's able to enjoy themselves here, so want to make sure that everything's looking good on your end. While we're waiting, good morning Robert, Joel, Jay, Vashud, let's short new. Yeah. So good morning, everybody. Hopefully everyone is doing well. Once again, my name is Patrick France, Senior Instructor here at VectorVest. Been here for well over 9 years. People around here and people out there call me the mobile man because I primarily focus specifically on the VectorVest Stock Advisory app. If you're new, if you're saw this pop up in your feed from somebody else, the VectorVest Stock Advisory app is a mobile app that will allow you to manage your portfolio, find great stock ideas, tell you when to get in the market, tell you when to get out of the market. Essentially, it's like having your own personal money manager right from the palm of your hand. So if you're new, welcome. Hopefully everyone is doing well. Let's go ahead, jump right into it. You guys saying that you guys can hear me, so let's go ahead, get right into it today. We do have a special topic here where it was picked from you guys from our poll last week. I will do another poll here in a few moments so you guys can start voting on what you want to see next week as well. This way you guys get exactly what you're looking for. That way it can help you out and help you become better investors and, give you an idea of what to expect for the upcoming weeks there. So with that, let's go ahead, jump right into the market, take a look at what's going on here, see what the market's doing here today, and dive into our topic and dive into a few other discussions throughout the session here. So as we can see right now, we are currently one tick into the red. Therefore, the color guard is mildly bearish, and VectorVest does not advocate buying any stocks at this time. If we scroll down, we look at the color guard here. We actually see we have 3 ticks into the yellow, which will probably be changing here in a moment. But the first we look at is the price, which is looking at the price of the VectorVest composite. Now, if anybody is new here, the VectorVest composite is an arithmetic indexed average of about 8,200 stocks that we track in the US market each and every day. Now, we do track other markets as well. Today, we are going to be focusing on the US market as our example, but everything we cover here today can be applied to any market around the world as well. Also, if anybody is here just on the mobile subscription, I will be using the premium version of the app. So if something looks off or something looks different, that would be why. If you want to upgrade, or if you're not on the premium subscription or premium package and you want to upgrade to it, there is a link in the description of this video, so you can click on that, download it, and get started with that as well. So getting back into it though, we look at the price of the VectorVest composite to get an idea of where the market is, or where the market currently is, and where it seems to be heading. We analyze it by looking at the day-to-day movement and also the week-to-week movement. So for example, if we see a yellow light here that tells us that, the market is either, let's make it a little easier for you guys. If you see a green light, that means the price of the VectorVest composite is higher day over day and week over week. If it's red, it'll show that the market is lower day over day and week over week. And if it's mixed, we get a yellow light. So as you can see, we did move, we're still higher on a week-to-week basis, but we are lower from yesterday. So therefore, that's why we see that yellow light in the price column there. Looking at the RT is looking at the short-term price trend in the market. It's going to be cast on a scale of 0 to 2. So above 1 shows the short-term trend is up, below 1 the short-term trend is down. As we can see, the RT is currently at 1.05, so technically the short-term trend in the market is up, but we have seen it weakening throughout the last few weeks, and it's something we can take a look at in a little bit more detail in a few moments. After the RT, we then get the BSR, which stands for the buy to sell ratio. So every single day here at VectorVest, we give a buy, hold, and sell rating on each stock that we track. And we analyze the stocks with the buy to the stocks with the sell to get an idea of, how strong this market is. So if the buy to sell ratio is above 1, that shows that there's more stocks with a buy than a sell. Or another way of looking at it is there's more stocks participating in the market, which would indicate overall market strength. Below 1 shows us there's more sells than buys in the database, or overall market weakness. So once again, just like with the BSR, it is above 1, telling us there are more buys and sells, but we have seen this softening over the last few weeks. So that does show us less and less stocks are participating. However, there's still a majority of stocks with a buy than a sell. Kara, I'm not sure what header box you're seeing. Maybe somebody can help you out that's able to see that too. And then we get to the MTI. And the MTI stands for the market timing indicator. This is going to be cast on a scale of 0 to 2. And above 1, the underlying trend of the market is up. Below 1, the underlying trend of the market is down. This is looking at the trends, the price, the RT, and the BSR that we use to analyze the market. So as you can see, it's 1.53, telling us that the underlying trend of the market is up. Now, with the MTI, there's a saying that we have here at VectorVest saying, keep your eye on the MTI. And when the MTI gets to 1.6 or higher, that generally shows that the market's looking for a top. Whenever the MTI gets to 0.6 or below, that shows that the market's starting to look for a bottom. So while the markets have been, doing fairly well, we've seen the, markets rising off of those lows from the end of March. We do see that we are top heavy. The market is in overbought territory right now, just giving us a sign of caution just to be careful. Take advantage of this uptrend while it lasts, but don't go betting the farm to the upside. This is a good time to tighten up your stops. If you have really good gains in certain equities, make sure to lock those gains in, that type of situation. So after the MTI, we then get the trend column, which is going to look at two parts of the trend each and every day. The first part looks at the primary wave, which is simply the weekly trend of the market, or the short-term trend of the market, if you will. As we can see, it's up since the price of the VectorVest composite is higher than it was 5 trading days earlier. The second part is looking at the underlying trend of the market, or just simply reiterating what we see with the MTI. So with the MTI being above 1, the underlying trend of the market is also up. After the trend, we then get the calls column, which is going to stand for our confirmed calls. Now, our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. Therefore, regardless of what style of investor you are, you never want to ignore a confirmed call change. So as you can see, being in a confirmed up situation tells us that we're still on a longer term perspective, still in an up market. All right, I see a lot of questions coming in about what we're talking about here. So let me just get to some of those questions real quick, get those answered. Let's see. MTI is a 50-day moving average from VV price. Is the master indicator, which is 1. 50-day moving average of that, but it is looking at averages based on the price, the RT, and BSR Leonardo into one. Really wondering why VectorVest not adding current ratio from the stock. What current ratio are you talking about there? High volume trading stocks, typically you'll have days to make 8K and the next day lose 6. It's all a gamble. Robert, so with that being said though, using VectorVest and having it on your side will help you avoid those 6K losses. It's not really a gamble. I mean, it is technically gambling in a sense, but when you have VectorVest on your side to help you find the good stocks you want to take a look at, that will help you significantly there. Because not only do we show you what stocks you can make money with, but also what stocks or how to manage those stocks, how to use money management criteria, and help you protect your profits and help avoid taking big losses as well. Let's see. Current ratio for the stock. Not sure what the current ratio you're referring to is. All right. So with that in mind, before we go any further, let me go ahead and get this poll posted for you guys. And this will help see what you guys are most interested in. So I do have the poll posted here. That should help you guys out. Everybody go ahead, put in your answers throughout the session here today. And that way, we can see what stocks you guys want to take a look at from our premium list or the stock pick list. So go ahead, get your answers in. Let me make sure, publish poll. There we go. Awesome. So now the poll is live. You guys should be all good. I do Forex trading. Is this the same thing? So Vashud, we don't really do Forex trading. Forex trading is a lot different than just stock trading. We cover typically stocks, ETFs, those types of things, options, those types of situations, not really the Forex trades. All right. All right. So with that, let's go ahead, keep going on here. So next thing we like to look at, as always, is the advanced declines. The advanced declines tells us how many stocks are moving higher today, how many stocks are moving lower today on a day-to-day basis. So in general, when the market's moving lower, if you want to get into a position to take advantage of the downtrend, you typically want to see twice as many stocks moving lower than moving higher. And on the inverse, if the market's moving higher and you want a good day to get in, you want to see twice as many stocks advancing than declining. So as we can see, right now we're sitting about 20% of stocks moving higher and about 69% of stocks moving lower. So with all the major indices in the red, if you were going to be taking advantage of a downturn here today, or if you wanted to play the market to the downside here, today would be a good day to do so. All right, looking at the major indices though, the Dow's down 1.5, NASDAQ finally turning into the red, which has been the most resilient major indice out of the top three. Down about 0.5%, and the S&P's down a little over 1% as well. As the overall market moves though, we're down a little over 1%, just like the S&P, with the VectorVest composite being down 1.09% here. Joel's asking, how much would you say is a good amount of money to start off with when getting into this? So Joel, over my 9 years plus of being here at VectorVest, I've helped people that started off with $1,000. I've helped people starting off with, 5,000 or 50,000 to 100,000. Regardless of how much money you're getting started with, you still want to use proper money management, and you still want to, treat the portfolio the same way, regardless of how much money is in it. And having VectorVest on your side will definitely help that and help you make smarter decisions to help grow whatever you're starting off with faster than trying to do it on your own. All right. So let's go ahead, jump into today's topic. So this was chosen by you guys. And what we're going to be talking about is looking at MACD, how to use it. There's two main camps you can go with MACD. You can either use it as a longer term indicator or as a short term indicator. So we're going to be looking at both aspects of it and talking about, regardless of what your investment style is, how to utilize that for your personal portfolio there. So what we're going to do is we're going to jump into the watch list section, take a look at our watch list that we created from last week. This is one that we talked about, looking at candlestick patterns. If you want to go back, as always, you can go back to the live section on our Facebook page and view any of our previous live streams. So that way they are all recorded and you can go back if you don't get to watch the whole entire thing. Also, while we're getting into this, if you haven't already, make sure to hit that like button, make sure to hit that share button as well. All that helps me out, continues to grow our support, continues to grow our education, teaching people how to become financially independent. So if you haven't done so already, I would greatly appreciate if you did that to help me out, to get more insight on how I can help you guys out the best. All right, so let's go ahead, take a look. First one, PRPL. What we're going to do is we're going to pull up the graph, and I'm going to switch it to widescreen so it makes it a little bit easier for you guys to see. And from here, what we're going to do is we're going to customize the graph. So as you can see, just by the default, we have, looks like some envelopes, some moving averages. We have RT. If you click on the little gear in the upper left, you get the settings page. We're going to turn off envelopes first and foremost. Then we're going to come down to indicator for the lower graph and choose MACD crossovers. Also, if you are more in depth with MACD, you do have the ability inside the app to customize them. We're just going to go off of the basic standard uses of 12, 26, and 9. There are some other moving averages that you can use for MACD, but for today's example, we're going to be focusing on the more commonly used 12, 26, and 9. And if that doesn't mean anything to you, or if you're, new to MACD and you're wondering what that is referring to. So the MACD is created of two lines, two lines, yeah. And the first one is called the MACD line. It's using the difference between the 12 and 26-day moving average. And then they use a signal line, which is looking at the 9-day moving average. If you want to get the exact calculations, by all means, check out investopedia.com. It's a great resource to help you get the full mathematical formulas for all this. But to make sure everybody's on the same page and not try to confuse anyone out there, I'm just going to, keep a simple definition of it here. And so what you're doing is you're looking at the difference between the 12 and 26, which is considered the MACD line, and crossing above or below the 9-day moving average, which is the signal line. So if we zoom in, we're on a 1 year. We're going to go ahead and zoom into a 3-month. And let me see if we can find a little bit better of a period to look at. There we go. 6 months is a little bit better, clearer for you guys. So what we can see is the blue line is the MACD line. The black line here is the signal line at the bottom. And then the orange bars are just showing the difference between those two moving averages. So that way you can see if they're bearish or bullish, positive or negative, however you want to look at it there. So on a short-term basis, when looking at MACD, when the blue line crosses above the black line or the MACD line crosses above the signal line, that is your indication of a short-term buy opportunity. Another way of looking at it is when you see those bars in the middle there go above zero, that is a buy, or that is a positive signal telling you to buy. And when the orange bars go below zero, go into negative territory, that is a sell opportunity. So, the great thing about MACD is it not only allows you to, see the momentum and see the trend of the stock and gives you a buy opportunity and tells you when to buy, a systematic approach of when to buy, but it also gives you a systematic approach of when to sell. And, over the years, I've found that is the hardest part for a lot of investors out there, is having a systematic approach of knowing when to sell. Emotions are the number one portfolio killer. And you see that happen, that, they have a great gain in the stock. They don't want to give it away. They, think that the stock's going to continue to do that for, forever and ever. And they hold on to the stock. And by the end of the next few months, all of a sudden the stock starts reversing, and they let their gains go away and end up, booking a loss there. We don't want to have that here at VectorVest. There's a saying that we talk about every single week here on Facebook, and that's, you can never go broke taking a profit. That was something our founder, Dr. DeLito, preached time and time again, and that is something we will continue to preach as we move into the future. So, getting back into it, as we can see here on most recent run, we had a MACD crossover right around the 7th of April, and it was trading at around, what is that, we'll call that 550 there. And then continued to run, and then finally, right here on the 12th of June was our time to get out at 1572. You could have easily maybe, skipped that day, but if you followed it to a T, you would have gotten out there. So you've almost tripled in price over a 2-month period. This is exactly what we're talking about. Not only did you, capture a great gain, you got in early, you followed a systematic approach to get you in early, and you followed a systematic approach to make sure you're locking that profit in. Now, granted, it has continued to move higher a little bit, but you made almost 300% in 2 months. If you're not booking those profits, something else is wrong. We need to really work on that. If you're not taking a 300% gain in about 2 months' time. And this is really, the key thing to MACD on a short-term basis. You're looking for those two moving averages, crossing above or below one another. And that can be represented through those bars there in the middle there. And now, as you can see, as the stock's been moving sideways, you see just this back and forth movement with the MACD just really moving sideways. Price is slowly moving higher a little bit, but MACD is starting to drift lower here, telling us that, this is something we really need to be cautious with right now, because it shows momentum is starting to wane just by a basic description or basic analysis of it here. Gerald, well, that's the thing, is if you're following money management, your losses should not be that big. That's what we talk about week in and week out. So if you're new here, I understand where that comment's coming from, but I definitely recommend you go check out, some of our previous videos in our live streams, because we've specifically addressed how to book profits early. So that way, you can lock those profits in and not let them turn into losses. We've talked about money management. So, if you are having an issue of knowing when to get out when you get into a stock and it doesn't go your way right out of the gate, how to set up some basic rules of thumb to help you manage those, to minimize losses and be able to fight another day. If one loss is offsetting or is, hurting your portfolio to the point that it's unrecoverable, then you really need to reanalyze where your losses are set at, where your line in the sand is set at. And that's really where you want to start off with that. But yeah, you can't go broke taking profits as long as you're locking those in and minimizing your loss there. So yeah, if you want to get more on that, make sure to go check out the previous videos that we've done on money management there. Also, I see a lot of people just now tuning in as well, just coming in. I do have a live poll going on, so if you haven't already gone ahead and voted, go ahead, answer the poll. Let's see what your guys' answers are so far. Awesome. Isn't this similar to EMA and MA crossovers? Yes, Joshua, you're completely right. The essence of MACD is based upon moving averages and looking at moving average crossovers. So it is very, very similar in that sense, but it's a little bit smarter in the sense that it's looking at the difference between two and looking at, a signal line. And it's more, not more commonly used because a lot of people still use moving average crossovers. But it's very similar in that idea, that you're looking for crossovers and playing that. Now, that's for a short-term trader. Yeah, they're very, very similar. We go take a look at the next stock real quick. EBS. We can see a nice entry right here. Well, first off, it got you out of this pullback here from about $90 a share to 85, all the way down to 75. So it saved you about $20 a share, got you back in right around, let's call that 76. And now you're still in it at 95. Great quick run, easy profits, told you when to get out. So let's analyze this the most recent, or the one prior to that. Let's see where you got in at right here around 57, or actually what's the close? 57, we'll call it. And then got you out right here at 86. So 57 to 86, not a bad day's work if you ask me. And not only that, you avoided a $20 a share fall, and now getting back in at a low point, 76, and riding it all the way up to 94 where it's trading at right now. Great opportunities can be used or can be made by utilizing technical analysis such as the MACD. Now, as I mentioned earlier, this is more of a short-term methodology that can be used for it. Another way of looking at MACD is as a longer-term investor. And the way we would utilize it is not just looking at the two moving averages, but looking at them on a scaling of 0 being the middle and being above 0 is positive, below 0 is negative. So as we can see, for example, on this one, you had both the moving averages, where was it? Right around here in negative territory. Then they finally broke above 0 right here on the 3rd. Right about the same time the two moving averages crossed over. And then finally here got out, a little bit ahead, but still not bad there. And this is something you can use, this necessarily isn't really a longer term stock. So let's go ahead and take a look at a longer term stock utilizing MACD in the way we're talking about here. So let's go ahead and take a look. We'll go back here. Actually, everybody loves Apple. We'll go ahead and do Apple. So looking at Apple, zoom out to a 1 year period. As you can see, there's a zero line that the bars on the MACD start from. And we had, oh man, this has been a great run on this one. So you can see even a year ago, MACD was positive, telling you to stay into it. Let's see if we go 5 years. So zero's at the bottom there. We had a zero crossover here around, let's call that 200. That was at a high right before it pulled back a little bit, but MACD was still positive. And then still kept you in all the way up to 380 where it's trading at today. This is a great indicator to use for longer term trading. Nobody wants to just sit and hold on to a stock forever. And, because if you do that, all stocks rise, all stocks fall at some point. And utilizing the MACD on a longer term perspective can not only help you, lock those gains in and make sure when the tide is starting to change on some of your long-term holdings. You can take advantage if you're a dividend trader or dividend investor. You can take advantage of the dividends as long as the stock's moving higher, but you're not sitting there relying on dividends as the stock is moving lower. I can't count how many times I've seen over the years here where people are holding on to dividend stocks because they pay that monthly dividend at the time that are just consistently falling here. And it doesn't make sense to hold a stock if the underlying asset is losing more than the dividend is paying out, because you're still overall net losing on that trade, if you will. So keep that in mind for anybody who's more of a longer term investor out there. That can really help, save you a lot of headache, tell you when, hey, time to get out. Help you remove your emotions out of some of those stocks that you've fallen in love with over the years that, have started to become things that hurt your portfolio over the time, that were great in the past, but maybe not as great now. Stocks change, trends change, hot industries change. All of that happens over long periods of time. And we don't want you to sit through, those periods like GE, for example. It was a great stock back in the day, but look at where it's at now. And this is what we don't want to have our users sit through, is something like that. Let's see. Salvatore is saying, personally, I'd add volume as a confirmation. Yeah, if you want to add volume, that is a great way to confirm that. That's getting into a little bit more than what we really wanted to cover. But yeah, definitely nothing wrong with adding some other form of analysis to it to help your performance there. All right, so once again, let's go back. We see another entry looking at Apple right around 100, let's call that 110. And then stayed positive up until, where is that? Right here, around 190. So you stayed into it for almost a full year, maybe a little longer than that, and almost doubled your money. Not bad there. Not bad at all. And this is really, from a long-term perspective, something that you could spend 5 minutes a day max trying to analyze, or just, taking a quick look, and help save yourself a lot of time. That's really what the whole purpose of utilizing technical analysis for your portfolio can do. The lines are crossing all over the place at the bottom. Yeah, so we're looking at the bottom there, Diana. And the crossovers we're not worried about for a longer term trader or for a longer term investor. What we're worried about is the two lines going above the level of zero, which you can see down in the bottom right. And then when they cross back below zero, that's a signal to give you an exit strategy to get out. And then worst case scenario, not every trade is going to be a winning trade. That's fine. Even the systematic or the automated trading out there doesn't win every single trade. They're only about 70% at the highest that I've ever seen successful in their trades. So what this can also do is not only help capture really good gains, but also if the trade doesn't go our way, it gives you a systematic approach to get out early, reducing your exposure, reducing your loss, and allowing you to be able to fight another day once again. So those are really the two major ways of utilizing something like the MACD. As I mentioned, you can customize it. So if we go into the graphs, go here, I'll just switch it back over so you guys can see this a little bit better. And then you can go to the settings option. You can change the first EMA period, the second EMA period, so the 12 and 26. I believe the other one, I'm not 100% certain, but I believe it was 8 and 17. If somebody is more familiar with that, go ahead and put those in the chat there, let me know. But I believe it's 8 and 17 is more of a shorter term look on MACD as well. And those can help for your shorter term trades, give you a little bit quicker responses, quicker entries, quicker exits, all of that here. Kieran is asking, missed it, what are those two lines? So these are the MACD lines. There's two lines whenever looking at the MACD. We'll go back here real quick. And when looking at it, the blue line is going to be the MACD line. The black line is going to be the signal line. If from a short-term perspective, just to reiterate, if somebody here is new or just tuning in. So on a short-term perspective, we're looking for the MACD line to go above the signal line or the blue line to cross above the black line. That gives us a short-term buy entry or an entry point. And when the MACD line crosses below the signal line, that tells us when to sell. So this will help you if you're an emotional trader. This will help you remove your emotions and tell you exactly when to get in, when to get out. No questions to be had, no second guessing yourself because it's doing the work for you. Now, as a longer term perspective, what you're looking for is the MACD line and the signal line to cross above the level of 0. And that tells you on a long term when to get in as a buy. And when it crosses back below 0 on a long term basis, that tells you when to sell. As you can see, we did most recently, after the correction we had earlier this year, did get a long-term buy on Apple based off of this. Looks like, let's see when that date was. Right around the end of March or beginning of March or April, excuse me. That would not have been a decent or a bad time to get in. What does it mean when the two lines go above or below 0? So hopefully that helps answer your question there, Steve. Yeah, just tuning in. Welcome to have you, or glad to have you here, John. Can MACD be used for day trades or short term? Yes, it can be used for day trades, short term trades. As we just mentioned, there's longer term trades and swing trades, but the swing trade methodology could also be applied for day trades as well. Hey Bobby, glad to have you in here today. Let's see, is this based on price? So yes. Luisa, all technical indicators are based upon price. That's what makes them technical, is they're looking at price movement to get that analysis there. So yeah, what today's topic is definitely specifically technical analysis, and that is based upon price. Does the app send notifications? So the app does not. We do have the ability to send notifications via text message or emails if you have the desktop program, which you can see above me. That has the ability to send you the alerts and of when to buy a certain stock, when to sell a certain stock based upon your criteria that you have for your portfolio. But the app currently does not have that functionality. All right. Thank you, Sam. Glad to have you here today. Can we see the graph settings? Sure. So if you go into graph settings here, right now you can change your time frame. You can change your frequency to daily or weekly charts. You can show extended hours even on the basic subscription here, or even on just the mobile subscription. You can do area or candlestick lines. You have the rating bar, moving averages. Right now I have a 30-day weighted moving average just from prior discussions. I haven't changed that there. Then we have envelopes, support resistance. You can go in, change those. Same as support resistance. You can customize those to your heart's desire. Then the lower graph, you can change it for volume, RT, or that short-term price trend, dividend information, earnings per share, MACD, RSI, DPO, and as always, you can customize those there. Is that functionality on the roadmap? Yes, Russell, it is. When it's coming out, though, I have no updates on that for you. When you say sell, is it recommended to sell 100% of your holding, or is that subjective? So Tyrone, it really depends on what your personal preference is. From a most basic definition, just simply selling 100% is the way it's described. But, there are caveats with any style of investor or any investor. If you're up 200% on a stock, if you're up 100% on a stock, and you see that sell, maybe you don't necessarily want to get rid of it, but maybe take half of your stock off the table to lock that profit in, and then, basically resetting your trade from that point. And you can do that, but at the same time, if you close out 100% of the trade, you can always get back into it later on. So we would really advocate, taking the trade as a whole off the table, but there are certain scenarios where I can understand why people wouldn't want to do that and why you may just want to take off a portion of it to lock in that profit and then restart that trade from there. What is the best support resistance settings? Dave, it depends on what type of trade you're trying to do. Did you answer Steve's question? Yeah. Bill, if I didn't get to that, I've answered it a few times. As always, you can go back and watch the replays if you guys want to take notes on that. All these sessions are recorded. So if you're tuning in late or you didn't get to watch the whole thing or missed something, you can always go back and watch the replays later on as well. Let's see. Baba is in China. Be careful. Yeah. It is what it is, but hey, the best answer I can give for you there, is, if you're trading, doesn't matter if you're trading in general, doesn't matter what stock it is, take advantage of the short-term trends. That's what a trader does. You take advantage of momentum plays, hot trends, hot industries, those types of situations. You're not really worried about the fundamentals. You're more interested in short-term gains, willing to take more risks. So obviously, take advantage of it while you can. But as a long-term investor, you do want to have fundamentals as your number one criteria of what stocks you'd be looking at. And in that sense, BABA would probably not be a great stock to get into. Just because their fundamentals aren't, as last time I looked, weren't the best. Maybe I'm wrong. Maybe they've changed over the months here. But hey, we can use that actually as our example when we get into your picks you got to take a look at. And so speaking of that, let's go ahead and do that. Let's go ahead and jump into the fan favorite here today, where we'll analyze any stock that you want to take a look at and show you how you can do so in less than 20 seconds. Where do you watch the replays? Listed on the VV website. So Norma, all of our replays are archived on our Facebook page, facebook.com/VectorVest7/live. You can watch them all there. And now we're actually starting to upload them on our YouTube page as well. So I don't know what the schedule is on that, but I know they're starting to upload our videos, our streams every week onto our Facebook page, our YouTube page. So you can go check that out as well. Also, if you haven't checked out our YouTube page, Glenn Tompkins does a lot of live streams on there. He has one today around 2 o'clock, I believe, for Trending Thursdays. If you've never attended that, make sure to check that out. Show him some support. He does a phenomenal job there as well. All right, so first one, BABA. Let's go take a look. So looking at BABA, actually not bad fundamentals so far. RV, RS, RT, VST are all going to be cast on scales of 0 to 2. Above 1 is good, below 1 is bad. If you can remember that, VectorVest is going to make your life a lot easier. So the first one, RV, is looking at the long-term potential over the next 1 to 3 years. As you can see, it's above 1, so it has decent long-term potential over the next 1 to 3 years. The next one is the RS, or relative safety, which is looking at the risk factor involved in the stock. So if it's below 1, it tells us there is more risk associated with it. Below 1 tells us above 1 tells us there is less risk associated with it. So actually some pretty solid fundamentals at 1.15, less risk associated with it currently. Then we look at the timing, 1.7. On a scale of 0 to 2, that's pretty close to 2. Really strong momentum right now as well. So overall, the stock's favorable. It has good long-term potential, less risk associated with it, steady, consistent uptrend. So yeah, overall, the stock's favorable right now. As you can see, it's only down 0.15 or about 0.1% here today with, what we see with the other major indices. Not bad. Those fundamentals are helping it, weather this storm that we're going through here today. So with that, overall, the stock is favorable. It is overvalued. We have a value at around 195. You are paying a premium at 257. Earnings growth rate, 19% every year over the next 1 to 3 years. Not bad. Earnings are steadily rising, which is going to be the engine that drives stock prices higher over time. Yeah. Good fundamentals, solid move higher. Take advantage of it while it lasts, but follow what we've talked about. Follow money management. Make sure you're locking your profits in. Make sure you're following your stops whenever they're met. Those types of situations, when they occur, follow them. Don't allow your emotions to override your current plan that you have for investing or trading. All right. Let's see. So Reagan, make sure to fill in or answer the poll if you haven't already. That will be a great idea of what stocks you're looking for, so we can talk about them possibly next week. NOK, let's go take a look. And real quick, just going to get a drink here. Also, folks, while we're getting into it, if you haven't already, hit that like button, hit that share button, do so right now. If you haven't voted on the poll, make sure to vote as well. So that way we see what you guys want. We can address the topics you guys are interested in, sooner rather than later for you guys. All right. So looking at NOK, NOK has good long-term potential, but does have some additional risk associated with it compared to the average stock out there. The timing is basically flat. Stock's really not going up, going down, really just sideways right now. Overall, the stock's favorable, but we've definitely seen better candidates out there. It is undervalued, has a decent earnings growth rate of 11% per year over the next 1 to 3 years. So yeah, it definitely has some potential, but because of the additional risk, you do want to be careful with it. Let's see, Genius Brands, GEN. What's going on? GEN. Not sure why it's saying that. I've never seen that message before. Let me get a screenshot of that real quick. Oh. Give me 1 second here. There we go. Don't know why I was getting that message. That's weird. All right, so Genius Brands. Poor long-term potential. A lot of risk associated with it. Timing falling like a rock. Therefore, the stock is not favorable. This was a momentum play a few weeks ago. Since that point, it's steadily been falling. We warned about that. Poor fundamentals, definitely a speculative play. This is why we talk about it week in and week out. For what style of investor these kind of stocks are really for. All right, let's see. Tesla, TSLA. TSLA, poor long-term potential, but pretty solid fundamentals. It's a really hot momentum play. If you haven't been, following the markets, Tesla has been on a huge run as of late. So therefore, the stock's favorable. Let's see. NVDA. NVDA, good long-term potential, really solid fundamentals, really nice strong uptrend. Overall, the stock's definitely favorable. BAC. BAC, poor long-term potential, a little bit more risk than average. You're in a steady decline. Overall, the stock is definitely not favorable. Really, for Bank of America, because I follow it pretty religiously, until interest rates start to rise again, we're going to see Bank of America struggling because that's where they get a lot of their money, a lot of their profits from. So, with low interest rate environments, that's going to put a damper on a lot of the bank stocks. MRK, but more specifically Bank of America because it's the most influenced by interest rates and loans in that type of situation. All right, MRK, great long-term potential, about average, maybe a little bit more risk than average associated with it though. With that being said, you are in a steady decline, therefore stock's about average, but with the lower RT, probably going to be staying away from that one. TTD. What is the right place to check momentum stocks? So Kieran, if you want to learn about momentum stocks, you could do hot stocks or premium stock picks, either or. But put your vote in and we can go over that, what you guys want to see. TTD, that was it. So TTD, poor long-term potential, about average risk associated with this stock, but you do have some really strong momentum. And because of that momentum, the stock is favorable overall, but be careful with it though. XSPA. XSPA, poor long-term potential, a lot of risk associated with it. It's steadily falling like a rock. Therefore, the stock is not favorable. Let's see. How do you get the stock details to show with dial indicators? So, let's go SPCE. So those should be at the top of every stock detail. You click on the little magnifying glass in the upper right. That's where you can type in your symbol and it'll give you the details page on any stock you want to look at. Looking at SPCE, you have poor long-term potential, a lot of risk associated with it. It is in a slight uptrend, but not enough of a strong uptrend to make that risk, worth it. Therefore, the stock's not favorable right now. Metrics to show an RV has been right versus wrong. So Russell, you can go and look at, the historical data for everything that we've tracked all the way since, the early 90s, when we finally moved into the desktop or computer version rather than just a newsletter. You can go back and check all of our data that we've ever put out on any stock out there. There's definitely ways of fact checking us and looking at it historically there. Let's see. RBGLY. Good long-term potential, but does have some risk to get to that long-term potential. And a nice steady uptrend. Overall, the stock's favorable right now. How are valuations calculated? So Mark, valuations in the sense, well, actually, regardless of what type of valuation you're looking at, we have a green book, a digital copy of the green book by our founder, Dr. DeLito. If you want insight on that, if you're on the desktop, you can get it from the desktop. If you're on just the mobile, just give our supporter a call, ask them to send you a link for the digital copy of the green book. And you can find, chapters on that and talking about that specifically. And because there's a lot more to those calculations or valuations than we have time here for today. Where do you see that earnings are steadily rising? So let's go ahead and take a look at the next one and I will answer that for you, Bill. Let's see. WKHS. So Workhorse. Poor long-term potential, a lot of risk associated with it. Timing is up, but not up enough to make this stock worth it. Therefore, it's not favorable right now. If you go into the graphs, we're on a 1-year graph. We're going to change our graph settings for the bottom and change it to EPS. And let me go ahead and just switch it so you guys can see this a little bit clearer. So looking at Workhorse, for example, this is our EPS. This is not going to be what you find from Yahoo Finance or anywhere else out there. Our earnings per share is not only looking at the historical performance, but also a forecasted performance for the next 12 months and blending those two together. So when you see our earnings per share number here, it's not only taking into account what the company has done, but what major analysts are expecting them to do 12 months down the road. So when we look at this, we can see, yeah, they're underwater on their earnings, but they have that right pattern. They're moving from lower left to upper right instead of upper left to lower right, telling us that they're at least getting their earnings on track, starting to get closer to positive territory, just not quite there yet. But you do see some positive signs with it. And that's how you can tell if earnings are steadily rising. You know, the best way of looking at it is just look for stair-step patterns. You know, steady rise from bottom left to upper right. Jamaican, you should be able to see the poll right on the main screen towards the bottom there where you can vote for it. All right, let's see. How does WRTC get a low RV? Let's go take a look. WRTC. So Raptech. Well, first off, the stock's only been trading since March of 2019, so a little over a year. Doesn't have a proven track record quite yet. Earnings steadily falling, telling us that the company is not making money. They're losing money. Go take a look at the other indicators here. Earnings growth rate, they're forecasted to lose 7% a year on their earnings over the next 1 to 3 years. Earnings yield, almost 2% down. PEG ratio of 50, that's not good. No dividends. So, yeah. Company doesn't have great fundamentals right now. So, therefore, you know, when looking at RV, it compares it to a AAA corporate bond or a relatively safe investment. This tells us that we have a better potential over the next 1 to 3 years buying corporate bonds, AAA corporate bonds, and making a return on those than we do have with our WRTC. You know, this is a speculative play. It doesn't have the fundamentals to back up the price movement that we've seen in it. RT is strong, so yeah, it's a momentum stock, but the fundamentals don't back up that price that we see on it. So hopefully that answers your question there. ECO, let's go take a look. Oh, not ECO. Not finding ECO. Let's go take a look at the next. Let's see. JPM. JPM, poor long-term potential, but about average risk associated with this stock. It's steadily falling. Therefore, the stock's not favorable right now. PINS, PINS. So PINS, poor long-term potential, a lot of risk associated with it. You do have some short-term momentum, so it is a momentum trade right now. Overall, the stock's favorable for the momentum trader, but for a long-term hold, no. If you're going to be holding stocks long-term, your primary focus is going to be on the RS, which if retirement stocks gets chosen as the number one pick for next week, that's where we'll be talking about it a lot more. But if you're long-term holdings, you want to have a strong RS. Simple as that. Loans down, fees up. Yeah. Let's see. OSS. And we'll do two more after this. So OSS, good long-term potential, but does have a lot of risk associated with it. Nice steady uptrend. Overall, the stock's favorable. But be careful because it is a riskier trade. So make sure, you're timing your entries and timing your exits there. Louisa, yes, this is all on the mobile app. Everything that we've been talking about here today is on the mobile app, and can be done on the mobile there as well. All right, so two more. Let's go ahead and take a look at INVVY. INVVY. Poor long-term potential, a lot of risks, steadily falling. Overall, the stock is not favorable. And then finally, the last one we'll finish off with is PAYC. So PAYC, decent long-term potential, less risk associated with it, really strong upward trend right now on a short-term basis. Therefore, the stock is favorable. And on that note, folks, right now the market is neutral. We are 3 ticks into the yellow, directly in the yellow. 3 ticks across the board. Still twice as many stocks declining than advancing, or well over twice as many stocks declining than advancing. We can see the major indices continuing to soften up a little bit here throughout the day. So be careful out there. And on that note, it's been my pleasure being with you guys here today. I hope you all have enjoyed your session. Let's go ahead and wrap up that poll. So, as we can see, we have hot stocks coming in as number 1 and retirement stocks coming in as number 2. So therefore, that wraps it up. We will be talking about hot stocks and maybe even talk about retirement stocks next week. Depends on how much time we have, but we're definitely going to be covering hot stocks for you guys and talking about those as we move forward next week. So on that note, it's been my pleasure being with you here today. If you haven't already, please hit that like button. Please hit that share button. All that helps me out in identifying what you guys really want to see more of, what will help you guys out the most. The more people here, the better, because I can get a better representation on, what the average investor out there really needs and what they're really looking for in terms of making them better, more successful traders or investors. So on that, it's been my pleasure being with you guys today. I hope you all have a great weekend. Take care, be safe out there, and make sure to tune in next week at 11 a.m. as we talk about your guys' topic of discussion, looking at some hot stock ideas. So once again, have a great weekend. Take care. See you all next week.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.